All right. Good morning, everybody. Happy Wednesday. Stop and think about it. Thank you, COVID. I don't even know what day it is. Hope y'all having a happy Wednesday, happy hump day. Glad to see everybody joining in. Siddharhar, glad to have you here already. And Sunaina, glad that you could be here. Happy hump day to everyone. Grab a cup of coffee. I am drinking a nice Starbucks blend. And by the way, if you didn't hear, Starbucks is closing 400 stores. That'll tell you the impact COVID is having. Luckily, my Starbucks is going to stay open. Otherwise, I don't know how I would function every day. All right. With that, everyone, let's jump in. Good morning, everybody. Welcome to the 53rd episode of FinTech Insider, the Breakfast Show US. I'm Sam Maule, 11FS Managing Director of North America, and I'll be your host for this show. Do let us know where you're watching from. I love that we have a global audience. Let us know where you're coming from. We'll give you a shout out. We love hearing where you're based. Most importantly, that share link down there, the share that's all in white, click on that thing, put it out there. That's how people find this show. Also, smack those like buttons, and please do subscribe to 11FS on LinkedIn so you never miss a show, and follow us on Twitter. If you haven't read our latest research report that we wrote with Plaid about how open finance will shape the industry, you can find it on this link, which is bit.ly/Open Finance 2020, and that's what we'll be talking about all day today. And I'm sure Bianca, the lovely Bianca, will put a link out there for everyone. First off, 3 news stories from the past 24 hours that caught my attention and should have yours. From market intelligence, profits across over 5,000 U.S. banks slid roughly 70%. Let me repeat that. Profits across 5,000 U.S. banks slid roughly 70% in the first quarter as the coronavirus halted economic activity and forced firms to boost loan loss defenses, the FDIC said in a Tuesday report. Wall Street giants saw revenue and profits diverge through the period. Wild hostility and volatility in the stock and debt markets drove massive sales across trading desks. Yet firms were focused to divert much of the earnings to protections for newly risky loans as the coronavirus tanked credit health and plunged the U.S. into a recession. Defensive reserves leaped to $197 billion from $125 billion from a year ago period, according to the FDIC. So, yes, we had some great news yesterday. We saw retail sales surge 17.7% in the U.S. But again, like I said yesterday, I would hold off until about August before I declared any semblance of victory over what's happening from the COVID economy. Story in TechCrunch this morning. Upgrade, a credit-focused fintech startup, announced it has raised $40 million in its Series D round. The company says it gives it a $1 billion valuation. So welcome to the Unicorn Club, Upgrade. The Upgrade round slots neatly into a few new trends TechCrunch has noted in recent quarters, including fintech startups raising at new higher valuations and some startups seeing sharp valuation growth on the back of comparatively modest raises. Other startups that have steeply repriced on small investment in percentage terms include Notion, more than doubling its valuation to $2 billion earlier this year, off to a $5 million investment. Upgrade CEO Renaud Laplanche, I love saying that name, Renaud Laplanche, stated the company has managed to quickly scale its revenue basis. Now, if Laplanche's name sounds familiar, it's because he was the founder and former CEO of peer-to-peer fintech company Lending Club, which went public in December 2014. Laplanche did run afoul of regulators during his tenure at Lending Club, leading to his ouster, and he since went on to found Upgrade, so I guess his second unicorn. And finally, Banking Dive reports Credit Sesame acquired Canadian challenger bank Stack as the credit and loans company looks to expand its new banking services internationally. The deal has been in the works for 8 months and will accelerate the fintech's expansion in digital banking. The CEO of Credit Sesame told Banking Dive, terms were not disclosed. Credit Sesame says it plans to integrate its credit services with Stack's digital banking offering to bring cash and credit management to Canadian consumers this year. Stack began working with Credit Sesame last year to develop Sesame Cash. The product, which launched in March, marked Credit Sesame's first foray into the digital banking space. All right, let's get our guest, the legendary Adam Davis, to the show. Adam Davis is with 11FS. He's our head of delivery based in London. And on today's show, we're going to talk about open finance. So what is it? What does it enable? And how is it different from open banking? Adam, how is lovely London today?
London is not terrible. Raining.
Not terrible. That's our sliding scale, everybody. London is, it's not terrible.
I normally have phone calls with you, Sam, or Zoom calls, and you've got a different background to now. Like I've never seen this before. I think you're just trying to pretend that you're cooler than you are. Maybe, I don't know. What is this?
I'm in my daughter's bedroom, so that's where our router is. You jackass! And so that would be her surfboard. I'm live in Florida, as you know, and the weather's beautiful, Adam.
I do.
So don't know what to tell you. So I hope you enjoy your COVID lockdown. Alex is headed to the beach shortly. You might see her walk in and grab that board.
I'm not jealous at all.
And that's what you get to look forward to, everyone, for the next 30 minutes. All right. So that said, we have recently published a report that we did in partnership with Plaid. That would be the Plaid that was acquired by Visa, everybody. I'm pretty sure everybody knows Plaid by now. Let me give my background story real quick on Plaid. And then, Adam, I'd like you to talk about how we came about partnering with such a great company. So back around, I think it was 2011 or 2012, I was at a dive bar in downtown San Francisco. With some friends of mine, all in the fintech space. And a good friend of mine said, hey, let me introduce you to this guy who's about to start a company. And he goes, hey, this is Zach. And so this young guy sat down next to me and told me how he wanted to take on the aggregators like Yodlee and a couple others because he thought, that was a market that was ripe for disruption. And I remember smiling and patting him on the back and saying, good luck, buddy, and thinking, dead in the water, never happened. That was Zach Parrott. That is the guy who sold Plaid to Visa for upwards of $5 billion. And I'm a moron sitting in my daughter's bedroom doing a podcast with Adam Davis.
Listen, it could be worse. It could be worse. Not quite.
It couldn't be. That's a horrible story. So, Adam, how did we come across doing a report with such a great company?
Yeah, I don't have as cool a story as that, I'm afraid. We work with Plaid at the moment on one of our bank builds. So I guess so. My role, I should probably start with that. My role at 11FS is head of delivery, and that essentially means that I look after our client portfolio for the bank builds and other proposition builds that we're doing around the world. So in the States, in the Middle East, and in the Far East, and obviously here in the UK as well. And because of the consequence of that, we've worked quite closely with Plaid across our engagements, and we've got to know them pretty well. That's across the company, both from a media perspective and obviously from a consulting perspective, which is that I work in. And we know their policy team very well, in particular. And we thought with our background of and where we come to the party, which is very much based around proposition development and understanding customer needs and being digital first, and their expertise in this specific area anyway around policy, we thought it would make for quite a nice paper, a nice counterbalance, and hopefully that transpires in what people read.
So Adam, let's dive just a little bit deeper, if you don't mind, into your background, because I do think it's important when you have a consultancy firm like 11FS that, we're out there a lot on the media side, but we do a ton in the consulting space. And what I enjoy about the company is we are made up of folks like me, just not as old as me, meaning these are people that have, they've worked at banks, they've worked at the consultant firms, they've worked at the tech firms. So this isn't theory that they're walking in with. So can you touch a little bit on your background prior to 11FS?
Yeah, sure. So my background is relatively varied. I actually started life as a quantity surveyor in construction, believe it or not.
I do believe that.
So I could build a building for you. But one of my many talents, and I left quantity surveying and moved into consultancy, and then have done a variation of being a consultant and being a banker, I guess, across the last decade really, before I landed at 11FS. And principally, some of the stuff that I've worked on when I've sat really on the consulting side has been designing new digital propositions for incumbents. So my background is, be it in either mortgages or merchant acquiring or new digital banks. My experience very much lends itself to the sort of narrative that we use at 11FS, which is very much, you can do things faster, quicker, cheaper, and better than you ever have done before. And I've kind of lived and breathed that across startups and banks and consultancies across the last sort of decade or so. So it was a relatively natural fit for 11FS. And the guys brought me in about 18 months ago to run our delivery team. And then I moonlight occasionally on the podcast as well when when folks are unlucky enough to have me on and listen to me drone on like today. But yeah, it's been a very cool ride.
So already have a great question in from a couple people, and I think this is a great place to start with respect to the report.
Yep.
So, and I'm going to slaughter your name, dude. I'm so sorry. Abdewala. I think I'm fairly close. What's the difference between open banking and open finance? And damn, that's a good question.
Yeah, it's a good question.
Let's start there.
So open banking is a framework in the UK that was rolled out about 3 years or so ago now. And essentially what it means is some of the accounts, I'll do this in sort of layman's terms. Some of the accounts that you hold as a personal customer or as an SME under a certain threshold of turnover, some of the accounts that you hold with your bank, payment accounts, that is those either from your transactional accounts, your current account, or all the way through to instant access savings accounts, so not termed accounts. They are within the scope of the framework of open banking. And what that kind of means is the banks need to be able to provide access to your data to you to permission other third parties to see. And that's kind of a relatively convoluted way of doing it. But an example of that is I bank in the UK with NatWest. I have a NatWest account, and I can permission, because it's one of the accounts in scope of open banking, I can permission other third parties to be able to see what my balance is, what my transactions have been, to do some funky stuff with it. So be that give me product recommendations, reward recommendations, etc. So that is at the highest of high levels. That's kind of where open banking is coming from. There's a lot of other nuances to the rules and regulations and to the framework that's been put in place. But at the overarching consumer level, that's kind of what we're talking. Open finance is different. Sorry, I know.
No, you're good. Go.
Well, I forgot the second part of that question. But so open finance is a little bit different. So the FCA, which is the Financial Conduct Authority here in the UK, have put out a call for input to the industry, and they did that at the tail end of last year. It was actually supposed to come to a conclusion in March, but it's now been pushed out to October. And it's a set of rules and recommendations on what open finance can be. And open finance, in this context, and we can talk a little bit about the wider context in a sec, but in this context, it's how do you open up more accounts and more industries within finance to join this kind of open data phenomena, I guess, which brings into scope things like insurance, pensions, wealth management companies. It brings into scope investment management company platforms, as well as all the other accounts that you've got and you hold with your banks, which are, let's say, savings accounts or other accounts which aren't just instant access.
So thank you for the definition, and hopefully folks that helped. Here's how I would look at this, and I think it's a great example. It's a weird one, but the one to embrace. So last fall, the CEO of Ford Motor Company was on stage at one of the largest conferences in Europe, and he said, "Hey, we don't look at Ford as a car company anymore. We look at Ford as a tech company that's integrated into a large ecosystem, and in that case, smart cities." So in other words, it was, how do you take an automobile, how do you take something that was analog and integrate it into a digital world, which is, forget silos, it's done, right? Forget verticals. Everything is becoming horizontal. So we're not going backwards. Welcome to the new world. Yeah. And so that's where we're at. So it makes sense that we would then look to partner with a company like Plaid to publish a report on this. So can you talk about that relationship with Plaid? How obviously we don't work with them, but how do we work jointly with them in publishing this report?
Yeah, sure. So Plaid, in the context of, I suppose, open finance or open data, Plaid are a pretty integral part, as are the other, what we would call in the UK TSPs, so technology service providers. And they're the guys who run the rails, essentially, and help the connections between the two data sets. So my data set that sits with NatWest and the party that I want to share my data to, or share my data with, I should say. And Plaid will basically run the rails that sit underneath it, and they'll do some smart stuff on top of that as well in terms of analytics and other things. And we're using them at the moment on one of our bank bills, essentially to play that role, so that customers who use this bank will be able to see all their current accounts with their, with any provider that they've got in the United States. They'll be able to see all of those in one place, and then obviously we can then provide, or the bank can then provide insights to those customers based on their total pool or total aggregation of their transactions. And that's how we know Plaid, pretty much. And then the relationships basically increased from there. And yeah, we just reached out and we're like, this could be kind of cool. What do you reckon? Because of the call for input anyway, we sort of done a response to the FCA as 11FS in terms of what we thought of the framework. And Plaid had obviously done something similar, as have a lot of companies in the UK. So we kind of just joined forces and created a narrative, and hopefully people like it. It seems to have gone down quite well.
Yeah, I think Sunina said earlier that she's read the report like 3 times over in the comment section. So evidently it's really, really good. I've read it once, but I will go back now, Sunina. Maybe the plot changes toward the end and I just missed it. It's a really good report.
It's a grabber.
Yeah, really, the movie's going to be incredible.
Oh, you wouldn't believe it.
Yeah, Danny DeVito's playing Adam. Everyone just so you know. All right, so let's talk a little bit about open finance as far as opportunities. So let's look at this from the financial services industry. So what kind of opportunities did we identify in the report?
Yeah, there's loads. I mean, it kind of depends. Yeah. So first of all, I think the implementation of this is going to be difficult. So this isn't something that's going to come into play and suddenly open finance is going to be enabled for everybody in the financial services industry. It's not as simple as that. So there is a long tail in terms of timeline for this, which again we can come on to in a sec. But I think if everything in the framework that the FCA recommended actually comes to fruition, in my opinion, it's going to massively change the value chains of the banks, the financial services players, and other providers that we trust and who we engage with. Because the real reason for me, I remember Andreessen Horowitz, I think their head of finance, got on stage a few months ago and sort of turned around to everybody that was looking at who was attending their conference and said, if you're not in FS at the moment, every single person here is going to become an FS player. And this is one of the technologies to put in place in order to lower that barrier to entry, where your trusted brand, be it Nike or Adidas, or I'm just going through sports brands now because the football season could become a financial service. So I think the important thing to note is when people say, oh, wouldn't it be amazing if your DIY shop or your trusted sportswear provider got into financial services because you really love that brand. This is the regulation, this is the framework that can enable that. At a more, I suppose, financial-based level, or if you're going to put a financial lens on it, it's going to massively change some of the silos that we've currently got. At the moment, if I go to an IFA, an investment management practitioner in the UK, the barrier to entry to actually getting advice from an IFA is incredibly high. The costs are really prohibitive. It's thousands. And you have to give them across a whole heap of data to be able to even start that process. And what we're talking about now is a complete amalgamation of a customer's total financial position, including balances, their mortgage, their pensions, everything, that you can just give to an IFA, who can then automate some incredible suggestions based on your real-time positions, really contextual recommendations, and completely change the kind of offers and services that you get as a consumer. And I think that along with the barriers to entry to non-financial players reducing, makes this, for me anyway, potentially one of the most transformative frameworks that we've seen in a long, long time.
Yeah, I agree. I mean, obviously we're that statement right there, transformative impacts that we're going to see. We seem to be saying more and more often, thanks to COVID, but also technology as a whole, right? The speed of change is accelerated massively. So talking about the consumer side of that and that transformational impact it's going to have, Siddharth, he's on here every day. Hey, Siddharth, founder of a company out in San Francisco, brought up a good point. He said, value for customer dictates that their entire financial data Be available to permission fintechs to provide magical insights and kumbaya to customers. Make a good t-shirt.
Nice.
But yeah, I like that. But privacy and data security dictate that the data silos are best, so that when one actor gets breached, the surface area of the data theft is minimized. Experience also has shown that this cannot be left up to customers, who often don't think hard before granting access to the data for third parties. So, Adam, how balance tension between desire for holistic data and security and privacy?
Yeah, and to be honest, in the UK with open banking, or in Europe with PSD2, that hasn't really come to the fore yet. So there's still a tension between how much security do you want to put on these journeys versus the UX and the customer experience of actually doing the journeys, and a lack of adoption of certainly the payments flow. And we can come on about payments initiation and PI in a sec. But initiating payments through open banking rails, that lack of adoption has been blamed essentially on a jarring security experience. We talked about previously, maybe on this show, certainly at 11FS, we talked a lot about secure authentications and things of that nature, and how that's manifested itself onto the customer journeys for open banking has been really jarring. I don't think we're at a position yet where the industry's found a solution that works, that is super seamless to customers. I think Trustly, Sweden have done a pretty good job of it from a payments initiation perspective, but it's still, sort of 6 steps or so. Whereas if you were to play with card on file, it's like 2, potentially 1 click if you're an Amazon customer. So it hasn't quite worked yet.
I'll tell you, go back, Sitter Hard, I'll send you a link, or maybe we can find it and Bianca can put it out here. So I think about a year ago or 2 years ago, I interviewed Lowell Putman. So Lowell was a founder of a company that was acquired by Plaid Quovo. And Lowell's great, man. I love that guy. Fascinating character. His wife is one of the people behind the Mirror. If you've seen the Mirror, the workout mirror for sports, that's incredible. So his wife is cooler than Lowell, but Lowell's great 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 grandfather founded Putnam Investments. So Lowell's kind of cool too. But when I was talking to Lowell, I brought this point up about data security breaches, and he said, "Look, I'm going to be blunt. Our entire business model rests on the fact that he goes, we're going to get breached. That's life. That's just reality now. But how quickly can we respond, and how quickly can we minimize the impact on it?" So trust me, companies like Plaid, the FIs, we all know that. And it is front and center. And that's why sometimes you see technology changes a bit slower in this industry than in others. But to Brian Cladgett's point, hey, Brian, glad to have you watching this. Brian said, we need to take the silos down quickly. If we don't do it, the consumer will require it. Our industry is then in a defensive posture. Better to operate from a position of strength. Agree.
Yeah, I agree. I mean, on a more holistic point to that, I think the one thing that there's loads of lessons from open banking.
Yeah.
But one of the things was that the banks didn't necessarily respond to the discretionary opportunities of open banking. Very consumed around the mandatory requirements, and trust me, those programs were big and required a lot of investment. But the actual discretionary opportunities, the ability to use open banking for proposition development, hadn't really manifested itself too much. And I think that was a big miss. If you look at Yolt and ING, the value of Yolt on their balance sheet now is incredible. And I think they were one of the first ones really to take advantage of what open banking became by putting out aggregation services first and putting out a new set of suite and services under the Yolt banner. And I think banks need to be readied and more aware of what's coming through from an open finance perspective to take advantage of it in a better way than maybe they did 3 years ago.
Yeah, I love Adam being so cool and talking about Yolt, bank based out of, correct me if I'm wrong, Netherlands, if I remember right. No, American audience, damn it, come on. The Netherlands is in Europe. Everybody, that's me being sarcastic. We have a very intelligent audience that, of course, knows that the Netherlands is in Europe. But Yolt actually is a fascinating case study, because this is a challenger that was actually created by the bank, was created by ING. So it's one of those steps where they went in to create this. And like you said, the value add for them has been incredible. Yeah. And the how quickly they were able to actually get traction up and running as being part of the bank, but yet being separate. So Yolt, everybody go out and look at them. YOLT, great Great case study on what can happen. Another good question. This one comes in from James Leach. What do you think are the best strategies for financial service companies, given there's a myriad of them? It feels like we're a point of aggregate or be aggregated, and therefore lose any real connection with owning the customer journey. Yes, that is the threat, by the way.
It's a massive threat. I mean, I think you look at the new ecosystems, closed loop ecosystems, which are currently being built, be that around payments or be that around lending. You know, the leaders of those ecosystems are those who own the customer or merchant relationships. So you've just seen WhatsApp Pay being launched in Brazil. If you look at the success of Stripe, who have targeted developers, Square, who have gone after, you know, SMBs with POS, all of them have sort of have created these ecosystems around them, which banks do play in, but they play different types of roles. And I think the days of banks owning that relationship and creating their own ecosystems are at an end. And now, you know, in order to own that merchant relationship, you're going to have a lot of competition from fintechs and from technology SaaS-based players. So the best way to do it, and again, I've seen another report that said that agency banks in the States are earning, I think it's like 15 or 20% above what they used to earn just by the amount of partnerships and the depth of partnerships that they've currently got. So understand what your strengths are and cultivate the ecosystem and take advantage of the ecosystem as much as you possibly can, without necessarily having to drive, you know, the initial merchant relationship. But just being in the ecosystem and playing a part in it and driving revenues from that is certainly a strategy.
All right. So last question before we're up against the clock. This one comes in from Sanina at M Science. Hey, Sanina. And this is the $1 million question. Is the U.S. ready for open banking?
Well, it's kind of different. So the states have got there's kind of two approaches to open finance, open banking, open data. One is market shaped and one's reg shaped, as in by government. The US has taken the former, so very much there isn't really a standardized set of the way that companies would create these kind of these connections in order to expose and consume data. There's not really, therefore you have to enter into what we call DDAs, so direct data agreements between companies in order to share that data. Whereas in the UK, Europe, and then like in Australia, for instance, we've actually put it in legislation. These things are actually got specific frameworks and therefore standards which you have to adhere to. So the industry is ready, but I think as in ready to start offering these services in a better way than potentially screen scraping. But the issue is more, has the industry got the collective alignment to be able to, you know, set itself up as a body and create those standards, which would make this a lot easier to implement.
Yeah, I'll just my 2 cents. I think in the U.S. It's going to be market driven. Everything here is market driven, in my opinion. All right, so we've got to wrap up. We're against the hour. Adam, where's the best place for people to learn about you, to talk to you about how bad Arsenal is going to get beat tonight?
There you go,
everybody.
I'm trying to show this in the pic. There you go. I've got my Arsenal mug. I'm ready to roll.
There you go.
I had to flash it. 11fs.com, Adam D8 on Twitter. I'm on LinkedIn. I'm in front of the TV tonight to watch Arsenal. You can join me in spirit there. Counting my sorrows with whiskey, probably.
Yeah. Well, Adam and I will probably be drunk later tonight and crying as we lay down in our beds as they have to play Man City. We're both predicting a 3-0 loss. I'm sorry, everyone. As for me, Sam Maule at 11fs.com, Sam at 11fs.com, Sam Maule on Twitter, on LinkedIn. Join us tomorrow, everybody. We're going to be joined by Ben Maxim. What a cool name. Ben Maxim. I mean, just incredibly cool. He's the head of digital strategy and innovation at Michigan State University Federal Credit Union. I'm not going to hold him against that since I'm a Michigan fan. All right. If you know someone else who'd be perfect on the show, don't hesitate to reach out to us. Best place to do that is at breakfastshow@11fs.com. Download the report. We put the link out there 1 million times. It is well worth the read. Adam, you and the team did a great job. Everyone else, thanks for being here. We'll see you tomorrow.